Good afternoon or good morning, based on where you are. My name is Charlene Brown. I'm a senior fellow at the Croatan Institute and director of the Racial Equity, Economics, Finance, and Sustainability Program, otherwise known as REEFs. Welcome to our very first Croatan Conversations. This is a series of deep dialogues with frontline leaders working on some of the world's toughest social and ecological problems. A few housekeeping items. This conversation is being recorded. If you're participating using Zoom, please use the Q&A box for all questions. If you're joining us via YouTube, please write your questions in the comment area. We have 2 additional Croatan conversations coming up. On August 26th, Josh Humphreys will be leading a panel discussion on fixed income investing in regenerative agriculture and resilient food systems. On September 22nd, Liz Umlas will be moderating our conversation on worker representation on boards. A little background about the REEFs program. REEFs was formalized in 2018 after 4 years of internal conversations on racial inequality. It is guided by a steering committee comprised primarily of people of color, and we are working to address structural racism within finance and to integrate racial equity as an explicit factor of analysis and engagement within total portfolio approaches to investing. You can follow us on Twitter at Croatan REEFs. Without further delay, it's my pleasure to introduce Bill Bynum, CEO of Hope Credit Union, and Jim King, President and CEO of FAHI, for today's conversation on persistent poverty, income inequality, and racial disparity. For more than 3 decades, Bill has been working to advance economic opportunity for disenfranchised populations. Jim has had an equally long and distinguished career working to advance opportunity for the people and communities of Appalachia. For more than 10 years, Jim and Bill have been close collaborators. As such, we're happy to have Jim, who also serves on the Institute's Board of Advisors, moderate today's conversation with Bill. Jim, the floor is yours.
Well, thank you, Charlene, and it's a pleasure to do this. It's always a pleasure to have time with Bill. So I'm glad to have him, and have so valued our partnership as friends, as well as our 2 organizations collaborating. I think we've seen that with the coronavirus, it just put a humongous spotlight on a lot of longstanding inequalities. And then after the murder of George Floyd, we saw more begin to happen in terms of conversation and attention on racial justice in our country, really just over the past 60 days, more than we had seen almost really in a half a century. But in light of all this attention and goodwill, there are deep structural inequalities, and some of those really bear out in the regions that Bill works in, as well as myself and others. 20 million people live in places of persistent poverty in our country, of which nearly close to 90% of those are in rural America. 60% of the residents of those rural counties that are in persistent poverty are people of color, which is, I think, a different picture than often people think of when they think of rural America. Dr. Luke Schaefer, who's at the University of Michigan, has been doing some study on some of these persistent poverty counties, and he would say that we tend to think of poverty in this country as maybe of a higher quality than what you see in other parts of the world, but when it comes to quality of life and health outcomes, persistent poverty counties in the U.S. and so it's for sure in the Delta and Deep South mirror places more like Bangladesh when it comes to health outcomes than it does the rest of the United States. So with just that little bit of backdrop, I had a couple of questions, and I'm hoping that we'll have a dialogue with Bill here on this. I think Hope is just this amazing organization. They would say that they define themselves as a community development financial institution in some ways. and as a community development credit union, and has, as per his introduction, over now going on 3 decades of work in the Delta and now the Deep South, trying to address persistent poverty as well as racism. Bill, I wonder if you might just speak to sort of the role of Hope as an institution that would in some ways be regarded more like a financial institution, and really how are you all key in closing the inequality gaps of race and income and poverty?
Thanks, Jim and Charlene, and really appreciate this opportunity to spend time with you. As always, good things always happen. We stir up good trouble, as our friend John Lewis reminds us is so important. But I'm glad to always do that with you. And Croatan is doing incredibly important work. When I saw the picture of describing the Reef's work, and it showed Black Wall Street in downtown Durham. I know that well. Did some work there out of college after almost thought I was going to law school, but stumbled across this group of folks who wanted to help tackle economic disparities. Jobs were closing. People were moving south of the border in places where labor was cheaper, not because the jobs weren't business weren't viable, but because it was more profitable to go elsewhere, and without regard for the people who were left behind. And so my first job in this line of business was actually doing work there in downtown Durham, helping to convert some of those companies to employee ownership, put the control in the hands of those people who work those long hours and get very little of the benefit of their labor. And so before I knew it, I said, well, I'm not going to law school. I think this is more enduring. I saw a lot of what I thought were settled doctrine, laws that were in the books weren't going to go away, being overturned by the courts. But when you put resources in people's pockets, when you help them to support their families and support their economies, their communities, you get more traction. That's more lasting. You put control in the hands of people. And so I've been trying to do that. I haven't made it back to law school yet. So, but you asked about how we try to address some of these issues at Hope, and I've taken to describing us less as a financial institution, more as an organization that was created to mitigate the extent to which things like race and where you're born and gender and things that people can't control determine their ability to climb the economic ladder and to be productive citizens. As you and I know, if you're going to do that, you're ultimately going to need financial tools, whether it's education or healthcare or jobs or access to groceries or housing. At some point, you need financial tools, and those are disproportionately absent in Appalachia, in the Delta, in the Black Belt, in the persistent poverty communities across the country. And so we try to bring those tools to bear as best we can with our minimal resources, but we multiply those resources by jumping on the table and shouting to whoever will listen that has the ability to invest in these communities, policymakers, financial institutions, corporations, individuals, and get them to understand that by making investments in the communities that you and I serve, it helps us all, because you have so many people that are ill-equipped to be productive because wealth has been extracted, because opportunity has never been available. And let's work together to make those tools available and see if we can have better outcomes.
It does sort of seem that when people, regardless of where they find themselves in this world, if they're given the right tools and the right opportunities, that they succeed. Is that kind of what you're saying, or am I?
Without a doubt. we were created back in the mid '90s, and one of my board members was a businessman. George Walker worked in the Clarksdale, Mississippi, ran a company called Delta Wire, and they won the Malcolm Baldrige Award for best in class. They put the tires. He used to tell me, we put the tires. If you got on an airplane this morning, we put the wire, made the wire that went in those tires, and so best in class, very high quality, precision work. But he did it with Delta folks, indigent residents of the Mississippi Delta, who, with the right tools, people in Delta can do anything that anyone else can. They just need the opportunity. They need the resources, and that was profound. And I found that to be true. And so our job is to put the tools in the hands of people who need the most.
When you look at, let's expand it, not just for what work you see at Hope, but just as you think about like other communities that have some of the similar barriers, what do those barriers look like for places of persistent poverty, and how are those, what is the work that you feel it'll take to sort of overcome what drives those inequalities and structural racism?
Sure. Can you see the map that I just put on the screen?
Yeah.
So this, it's hard to think about the challenges that we're facing today, or that you and I have been working on for decades, without thinking about the conditions that led to what we're dealing with. And so this map is just so striking when you think about it. It's a map of where slaveholding concentration was greatest prior to the Civil War. It's what took us to war. And if you see the darker areas, that's where the concentration was the greatest. And you would imagine it's across the Deep South. So keep these darker areas in mind and fast forward to this series of maps. And again, in the middle is a map where the darker areas are communities where you've had poverty over 20%, not for 3 decades, which is what the federal definition of persistent poverty is, but for a half a century, deep, entrenched, rooted poverty. And these are very much the same places where slaveholding concentration was greatest. And so it's the area of the country where you have the greatest concentrations of African Americans. You also look at every other indicator of economic and social well-being, and you see that we fared worse than the rest of the nation, whether it's jobs, education outcomes, housing conditions, and people's ability to get a fair price, responsible mortgage. Where you have the worst health outcomes and the highest concentration of medically underserved people. And to your work and mine, least access to basic banking services, whether it's you trying to buy a mortgage, or you need a business loan, or you need money to repair your car so that you can go to work, or your truck so that you can you can undertake your business, carry out your business. Those resources are less likely to be available in these high poverty, persistent poverty places. And so it is a centuries-old dilemma, and we unfortunately, don't learn lessons very well. We have a short memory. We saw after Hurricane Katrina, where I really appreciate you and so many others coming to the aid of your neighbors on the Gulf Coast and in New Orleans. But those communities were devastated, and unfortunately, the people who were most vulnerable were the last to get support. Hope actually built some of the first homes on the coast after Hurricane Katrina, after we developed a plan and it got blessed by the state for low-income housing, and then it got put on the shelf. And so we, working with folks like the ones on this call cobble together resources, start building houses, getting people back in homes. But then we use our policy advocacy tools to get government to see in business community. It wasn't until the business community said that we can't continue to import labor on a weekly basis from Haiti, temporary visas. We've got to have our workforce back in place. And so then we took the plan off the shelf and we started providing counseling to over 10,000 people. That's $600 million in the hands of folks to rebuild their homes. Similar work in New Orleans for businesses. We've seen similar dynamics after the financial crisis, where banks closed in record numbers and left communities of high poverty communities in record numbers. Of the 2,000 bank branches that closed after the financial crisis, more than 90% were low-income census tracts, primarily where you find people of color. And so we went from 8 locations to 30 locations across the Deep South after that, running to the fire like you and I do. After now during the pandemic, who's most at risk? Low-income people of color. They contract COVID at higher rates. They die from COVID at higher rates. They're more likely to lose their job because they're in the service and retail sector. They're less likely to have health insurance. And so they're more exposed. And so, we've been running to the fire again, in a normal year, we'll do 40 to 50 business loans. We've done 2,600 and counting paycheck protection loans in the last 4 months. From 40 loans a year to 2,600 loans in a few months, because that's where the need is. And fortunately, we've got friends who have stepped up and helped us make that happen.
And really that level of investment seems to run counter to what we tend to see happen in the Delta and the Deep South over long periods of time. I think you and I've talked about just as a placeholder, like philanthropic giving in this country is about $400 per person, sort of on a per capita basis, but in the Delta that runs closer to more like $40.
You mean this slide?
Sorry, I got ahead of you on your slides.
No,
we've talked before, right?
No, we're in each other's head, Jim. It's a good thing. No, you see it. Those are pretty stark numbers. You get what you pay for, and we're not paying for opportunity. We're not paying for equity. We're not paying what we need to be paying to help this country thrive. And $41 versus $450. You're not in the places that are most vulnerable, most fragile, where wealth has been extracted for centuries. You're not going to close these gaps by throwing pennies on pennies toward them.
You can choose, of course, whether you think this is even helpful, Bill. But I think it's interesting. The first time that we expanded some services into some markets where we had there was a little bit of pushback that maybe we were competing with banks, community banks, and but when I hear how the branches have extended into these communities, when you went to your now over 30 branches, it might be helpful for folks to just hear what that looks like, because it doesn't sound like competition.
We go into opportunity deserts. It's where these tools and resources are not otherwise available, whether it's food deserts, housing deserts, or banking deserts. In many of the communities, neighborhoods where we're located, we're the only financial institution. Otherwise it's more like if you draw a map, if you map the financial service providers in Jackson and you look at the Black communities, you're going to find hope, or you're going to find payday lenders and check cashers. You're not going to find the community banks. You're not going to find the major banks. And forget the mega banks the Wells and Chases and B of A's. This is not in their CRA footprint, so they don't have branches here. Wells Fargo, and they do great job of investing in organizations like ours, thank goodness. But they're not providing services in these communities at the level that they should. They get fees, they extract profits from these places. But as you and I know, in our advocacy around Community Reinvestment Act, that's based on where you have a branch. And so if they don't have a branch, they can't check the boxes easily. And so they don't invest in rural areas as much as they invest in Boston and LA and Chicago. So we're, in addition to the philanthropic gap, there's a CRA gap. There's a bank investment gap in our communities as well.
But they would be willing to issue a credit card or for a qualified borrower make a mortgage, just not a branch.
And unfortunately, a lot of those mortgages are what led to the financial crisis, making subprime, exploding mortgages to people who couldn't afford it, just extracting profits, and you see where that got us.
I do see where it got us. I'm not knowing exactly who our audience is. I think we anticipate there would be folks who are really interested in thinking about things from an investment standpoint. What would you say the role of a conscious investor or a conscious capital should be looking to do right now? Where does money go to work that makes a real difference?
No, you see where it's not making a difference. And again, I appreciate what banks do to support CDFIs. They're the primary source of investment in CDFIs across the country, and that's critically important. But it pales in comparison to what the banking system. The banking system is the primary provider of capital in this country for businesses, for mortgages, for community facilities, for individuals, and we're just not. We're a flea on the back of the financial system in this country in terms of impact. But we need, we're the only game in town in these persistent poverty communities and communities of color, and so investing in CDFIs. I'm biased, but we are so under-resourced relative to the need. We saw during the Paycheck Protection Program how many businesses were on the back of the bus, or not even on the bus, in terms of accessing these resources, and how CDFI stepped up and filled the gaps. We saw after the financial crisis how CDFI stepped in and helped so many home buyers and low-income people stabilize their lives. We're seeing it now, in addition to the businesses, just helping families stabilize their circumstances in so many ways. I'm sure with your members, you've seen a lot of flexibility afforded to individuals to help them navigate this crisis that they're not going to get as readily from your community bank or traditional bank. And so I think we are we're the front line. We're the first responders in the financial system for underserved communities.
Yeah, no, I think that is exactly what we're seeing, and I would venture that most frontline community groups are having the same experience, right? Like there's something about a model like Hope where it isn't just that the money is coming and the capital coming from somewhere else. It's you are an institution that where your staff, everybody lives in the region that you're serving. And so when that branch comes to that community, like in Itabena or wherever, it's there's a bit of a this is a resource of the region, and assets are hard to come by, I think.
You know, that's certainly the case. You know, whether it's in Appalachia or the Rio Grande Valley or Indian Country or the Delta or the Black Belt, you know, you just don't have the resources in the communities to support the housing, to support the businesses, the community infrastructure, facilities, healthcare clinics, nonprofits that are just so critically important at this time and being a safety net for people. But they need fuel in their tank as well, and as do CDFIs. And so you asked about resources, grants, to keep us in a position to provide the support that we need, capital that we can lend, flexible patient capital, low-cost capital that we can extend flexible terms to people until the economy has some certainty in it. We've got to have patient capital so that we can be patient with those communities and people that we serve. In our case at Hope, you mentioned Itabena, we were really fortunate to receive a $10 million deposit from Netflix recently. And that's critical in so many ways. We have a product we call transformational deposits. In Itabena, if we had a 100% of all the market share of deposits in that community, we would only have just about $1.25 million. All right, you take 5 fully insured by the federal government deposits, $250,000 a piece. You've got more than the entire deposit potential in Itabena. You can't support the houses, the businesses, the needs for families in Itabena with $1 million. You need to import capital into these places where capital has been extracted or been denied, and wealth has been denied for centuries. And so the Netflix deposit is 10 basis points, it's 2-year certificate, and so that'll help so many Itabenas and Selmas and Moorheads and Forest City, Arkansas, just small communities across the region, as well as here in West Jackson, you got bank deserts in inner cities in our communities as well. And so we're in Memphis and New Orleans and Little Rock, Birmingham, Montgomery, as well as the Delta and the Black Belt. And Selma is still the poorest community, poorest town in Alabama, 55 years after John Lewis led that march across the bridge.
I had a question formed in my mind, Bill, and then when you said that about Selma, it just it caught my attention, and now my mind went somewhere else. I mean, I think it's even I'll just as a sort of a side comment on just some of these persistent poverty regions. We've got counties where people and small communities where, when you talk about probably the lowest income in Alabama, would you happen to know what the median income is offhand or in round numbers?
I don't. I would not want to get it wrong, but it's the poorest. It's poorest town in Alabama. That's dirt poor, as my grandma would say.
Yeah, well, I mean, I don't think it's uncommon, whether it's in Indian country or on the border or in the Delta, that in Alabama, more in the Black Belt, that you end up with communities where median household income is sometimes at the poverty level for a family of 4, and that is not. I don't find that to be terribly uncommon, and which is just a reflection of the consistent disinvestment.
Jim, related to that, and you talk about Selma and the Black Belt, you and I have worked together on so many times around policy and advocacy. If you look at where the CARES Act and the trillions of dollars that have been flowed into the economy, I'm really concerned that left unchecked, that those trillions will widen the gaps rather than close them. One example is how CARES Act funds are being allocated to municipalities, counties, and towns. In Alabama, it's on a reimbursement basis. And so if you're a Selma or one of the many towns and counties in the Black Belt, and you are already dirt poor, and your economy has been obliterated because of the sales tax and income tax loss resulting from the pandemic, you don't have the ability to put up front the money to invest in PPEs and other things that will save lives that a more affluent county can. And so we've been working with the Black Belt Community Foundation and several businesses and individuals and foundations that have put a deposit in Hope Credit Union that is securing a bridge loan that to the Alabama Black Belt Foundation, Community Foundation, so that they can provide funding to counties to access, make the purchases that they need, and then ultimately being reimbursed for the state, with the CARES Act funds. But what you see is that the policies often disadvantage those who are poorest. And it's up to advocates and people who care to make the investments to close those gaps, and then to advocate for policy change that eliminates those disparities.
I think we're talking about the same thing, although I like that idea. I'll make sure somebody on my team follows up to figure out how we replicate that notion in some of our service area. But if you think back, when I think back to the Great Recession and when there was funding that came out back then, the phrase that was used was shovel ready. But it implies the same kind of barrier where if a community or a 501c corporation that's doing that community work doesn't have the resources to go ahead and get something prepared, it's the same as almost having the cash to put up to be reimbursed. It makes it, if you don't have a lot to work with, it just puts you behind the ball and puts the priority not on getting the money where it needs to go, but on where it'll turn over the quickest.
Yeah, it really is frustrating, whether it's requiring that organizations and communities and people in participatory areas come up with matching funds. Well, yeah. Where's that going to come from? You're the poorest places in the country and have been so for centuries. So those idea of matching funds is ridiculous. And again, shovel ready. Well, these folks don't have a shovel. It's just really, you got to start to make investments in these strategic, smart investments in these communities. And I'm really, we've done a lot over the past few years to work directly with local government, municipalities, and local leaders, and asking them what will it take to improve conditions in your communities. They're poor, but they're some of the smartest people. They do a lot more with a whole lot less than anyone in the country. And so they'll say, look, we need housing, quality housing. We need a grocery store. We need jobs. We need health care. And sometimes we have tools that we can use to help close that gap. But we often have relationships where, you and I, when we could go to Washington and walk around on Capitol Hill and knock on doors, have gone to members of Congress and advocating on behalf of those communities. And I've been impressed that they've said that we've got billions of dollars here that we love to get back into these communities, but the communities don't have the ability to write a grant proposal or don't have the connections. And so that's another critical role that CDFIs play, is connectors between resources and the communities and people who need them most.
So I'm happy to jump in because there are a few questions coming through from the audience, Jim, if I can perhaps. Is this a good stopping point? Yeah? Awesome. So thank you both for that conversation. Really enlightening, and really love seeing those two maps, Bill. It certainly tells a story, and I think we understand a lot of the reasons why these issues exist. So I'm just going to start with a question from Yvonne Murphy. She says, to anyone on the panel, how do you break the systematic and structural racism that is so blatantly evident in light of the current administration's response to the pandemic? I work in a rural community in Eastern North Carolina, and it is extremely difficult to see how, despite all the gains we have made in technology, in education, medicine, etc., there are distinct disparities in health, especially in low income and communities of color. She said, frankly, it's very disheartening.
Vote 2 or 3 times like they do in Chicago. I don't know, but no, vote for people who are going to support the things that are important to your community, and or get out and run for office. You know, both the local level, state level, but try to influence these policies. We do what we can, and to support these communities, but ultimately the stroke of a pen can either exponentially increase the impact of what we do, or it can wipe away the impact of the entire CDFI sector. You've seen just what can happen when policy goes right or it goes wrong. Let's do everything we can to make sure it goes right.
So we also have a question. So do y'all view the Jobs and Neighborhood Investment Act, newly introduced by Senators Warren, Booker, Harris, and Schumer, modifying the CARES Act, as an appropriate response to COVID's amplification of persistent poverty in rural areas? Or will those funds disproportionately flow to urban institutions? It appears to target CDFIs and minority-owned financial institutions.
Yeah, we've put a lot of work into informing. We've worked with Senator Warner, the Booker staff, and folks on the Hill to try to shape that legislation. It's certainly better than anything that I've seen. It's been great to see CDFIs and minority depositories talked about more in the last few months than I've heard them talking about in 4 decades of doing this work. So for various reasons, people are paying more attention to disparities and trying to make investments to close these gaps. The HEROES Act that came out of the House has some really strong provision in it to support CDFIs. There's not enough in this legislation, I think, to target resources toward persistent poverty areas. And so I would really like to see Senator Clyburn's 10-20-30 proposal built upon. Maybe 10 it was a nice start. I think what it did, 10% of federal spending in areas that have had 20% poverty for at least three decades, 10, 20, 30. I would say let's focus a third, or even potentially arguably half. If you're going to close these gaps, you've got to invest adequately to close them. But 10% is a good start. I think it socializes it, and it helps people to start thinking about persistent poverty, allow us to have these conversations, but it's not adequate. And so I think many of these bills are steps in the right direction, and we need to build on them and focus them more in the places that need it most.
If I could just add a little color commentary on with that as well. I mean, I think that if 20 million people out of 300 million in the United States live in persistent poverty, then 10% of any funding being sort of targeted to those communities still is below the level of investment we really want, and so I think doesn't even begin to make up for the bar graph that Bill showed, where like the per capita sort of philanthropic investment is so low, and you can add that across federal programs and bank and other private money. So I think we're starting from a community in the Delta is starting from such a place that we've got to overcome the lack of investment over decades and decades just to get even in getting some headway.
So I want to follow up on that. And we've heard demographers talk about the changing demographics of the United States. And I think you've made a really good point that we're not investing enough today. So from my perspective, what I would like to sort of better understand is, where do you think we will be as a nation if we fail to make the necessary investments in those communities today that are facing persistent poverty, if in fact the trend comes true that the minorities become the majority?
You know, have you seen the movie Mad Max?
A long time ago.
Dystopia. You know, I think we are. I actually heard someone speak about being in pre-dystopian times. You see those movies, but they never tell the story about the years that led up to that. And you know, arguably, you know, we're playing with fire right now. You know, we've got this divisiveness. You know, things that I thought had been settled years ago. You see now pushbacks against fair housing laws. Disparate impact that says you don't have to provide a smoking gun if you see wide disparities in how financing plays out. You have rolled pushback against community reinvestment. You know, the upheaval of the Community Reinvestment Act, it was already not doing enough. You've got the Consumer Financial Protection Bureau that had taken steps to protect consumers, but now that's being, you know, now Jim and Hope, we're the Consumer Financial Protection Bureau, quite honestly, and CDFI as an advocate have to step in and play those roles. And so I'm really concerned that, you know, we are playing with fire, and if we don't do more to bring us together in a country that's becoming increasingly black and brown, we are really going to be in a terrible situation. I think, you know, I'm not going to get on my get up here and preach a sermon, but I think somebody's trying to teach us a lesson, and we're not paying attention. And you know, we got, you know, I think I've heard we got to respect data, respect the environment, and respect each other. We haven't gotten it right, but I think if we don't do that, we're going to see more of what we're experiencing this year.
Jim, any additional comments on that?
Well, I mean, Bill covered that really well. I do think, just to pick up on the comment he made about, you know, the coming together. I mean, I do think that really runs against the grain of everything that's going on, where people more and more in our country are driven to go to sort of one camp or another on almost everything, right? And so, as opposed to like finding out how we work together, and Bill and I had worked together to put together this Partners of Rural Transformation, which was really to look for some of the things that are common across those regions that were on the map, even though we are different. But doing the hard work to sort of look at how we have some of the same issues, and that if we're going to build the power it takes to move forward as a nation, then I think it starts really with us.
Right. Let me go back to the question of policy. This is one of the questions. Since you both work in affordable housing, finance, and Black and low-income communities, care to react to the President's decision to rescind and modify the 2015 Affirmatively Furthering Fair Housing Rule?
You want me to go first for a change?
I'm trying to count to 10. Please do.
Well, I mean, there's not much constructive that you can say, right? Like, actually nothing about it, and all by itself, right? It's. I mean, he's just meaning to incite something to his base that has very little to do with that regulation, and so I think it has less to do with the the 2015 rule than it does with what I think with what the president's really trying to communicate. And in that way, it's just offensive. And I work in a part of the persistent poverty geography that has a more than 50% white. In fact, in some counties, as much as 90%. And this is totally harmful to them. And what we want that constituency to understand is that that is only setting them back, as well as anything else that President Trump's trying to do. But they don't, it's not always that people vote and in connection with what would better serve them. And so even though this is not really what we were created to do, I mean, that kind of education is part of what we've decided we have to really step up and take differently. I would like to be at a place where those kind of comments just aren't going to resonate with anybody in Appalachia.
Billy still counting?
I think
he's decided to count to 100, I think.
No, when you see what happened after the financial crisis and how much wealth was stripped out of homes, people lost their homes, and how many of the homes that were foreclosed on have been purchased by a handful of corporations, and many of them who are sit in the administration or some of the wealthiest people in the country on both sides of the aisle. This is, greed is not Democratic or Republican. It's disproportionately one way, in many people's opinion. But I do think that you have so many people who take advantage of the poor, and you see that in how much wealth has been stripped from housing, and now a large percentage of the affordable housing in the country is owned by a few large investors, and they're holding it and parsing it out and essentially being predatory financiers in terms of how that's being managed and how it's harming vulnerable people and places. And so I think it's just hard to take very serious any housing recommendations when the administration is looking to obliterate laws in the Fair Housing Act. I think Fannie and Freddie were trying to do better, by pursuing those affirmatively fair housing provisions, and we were trying to inform that, and that's now obviously been stalled because of this administration.
So someone is asking a clarifying question. For those of us who are non-specialists, it would be helpful to spell out the 2015 rule. It's hard to keep track of what President Trump does.
All my policies. I would probably stumble over it, but Jim, you may.
I know I will, but I'd be happy to follow up with folks and give and poll what that looks like. I mean, basically, during the Obama administration, there was the 2015 rule was meant to really help further or complete the work of the affirmative fair housing work that just didn't close enough loops. This is just rolling that back, saying, really taking us back to decades before where it just didn't have as much teeth and didn't expect enough. So and all of that comes out of the historic redlining and so it comes from those that gives HUD the ability to make sure that different kinds of housing programs are targeted where they're better needed. And this just kind of puts the brakes on that and gives developers an easy way out.
Right. Is channeling money, particularly deposits, to Black-owned or Black community-focused banks a helpful way to expand opportunity and access in these communities?
Yes, without a doubt. just by virtue of proximity, for minority-owned or controlled financial institutions, black financial institutions, 6 of 10 people in the neighborhoods that we serve are black, compared to 6 out of 100 for non-black institutions. So you just, by virtue of those numbers, you're more likely going to benefit people who are disproportionately unbanked, underbanked, low wealth. Duke and Northwestern did a study recently that showed that for black families with children compared to white families with children, the wealth gap is 100 to 1. $1 to $100 for black families with children compared to white families. The gap is 10 to 1 for black households, 10 to 12 to 1 for black households versus white households. But when you add kids in there, it is just it's just insane, and you cannot address that without intentional policies, targeted investments in institutions that are more likely going to respect those communities, invest in those communities. When you have a bank in a community, people are more likely going to get a business loan, more likely to get a mortgage loan. If you don't have an institution out of the community, they're not going to get one. Also, back to what we can do to change policies, our policy center done analysis that documents that if you are a homeowner, if you have a bank account, you're much more likely to vote. You're much more likely to go to your local city council or local county supervisors and advocate on issues that improve conditions in your neighborhood. You're much more civically engaged. If you don't feel like you have a stake in the game, you tap out. 94% of our last survey, roughly 94% of HOPE's members were registered voters. That can move the needle on some of these issues, that people register to vote and actually vote in the interest of themselves and their communities.
What role can CDFIs play in helping low-wealth communities build affordable housing at 30% of the AMI? I understand that developers need various financing strategies that include credits and subsidy to make this type of affordable housing possible.
Jim, you want to lead on that one?
Yeah, 30% of median income in much of my footprint, and that would be true for Bill as well, are going to fall well below the line of poverty. 30, right? Like, I mean, when we talk about things like low-income housing developments that are done in places like Baltimore for teachers, are considered low-income housing developments, where teachers are among the best paid professions in a lot of persistent poverty counties. And so I just wanted to make that comment of like who we're trying to reach. And we do treat poverty in this country as though it's a relative problem, as opposed to when it has an absolute level. That said, I mean, this is something I think both of our organizations actually do quite a bit of, and you do have to have not just debt to go with things like tax credits, but there requires a certain amount of soft money, some type of secondary capital or subordinate capital that makes the financing sort of affordable, and it does take a higher degree. I've done development in Philadelphia before I came to Appalachia. There's a slightly higher level of sophistication necessary to pull together just a simple, small housing development in a really poor community, because you have to know how to use a lot of programs at once, and there's no other expertise to run and go get. And so CDFIs who live and work in these places often have, a mix of staff who can kind of source a deal and put a deal together that'll actually meet the lowest incomes.
Yeah. The only thing I would add is that everybody's not going to be a homeowner initially. You want to move towards that. That's why we both do quality, affordable rental housing. The largest percentage of our commercial loan portfolio is low-income housing tax credits. We find who are the good developers and invest in them so that they can build quality, affordable rental housing in low-income communities. But we also, is another reason that I described Hope, not as a financial institution, but as an institution that does what it takes to close these disparities and help build opportunity. And so we partner with groups that provide counseling and education, and we get people in a banking account so they can start to save and become, put themselves in a better position where they can become homeowners. But because ultimately, creating wealth and building wealth is a game changer, and nothing does that more than home ownership. And then the next thing is business ownership. For African Americans, while the household gap is 10, 12 to 1, for black business owners relative to white business owners, it's 3 to 1. It's not where it should be. It should be equal, but it's a game changer in terms of building wealth among entrepreneurs. And those black entrepreneurs are more likely going to employ people in those black communities. So it has significant ripple effects. But investing in comprehensive solutions that get people into an affordable rental housing so that they can start to save some money, getting them away from a payday lender to a deposit relationship with Hope or another community development financial institution or minority depository or entity that respects them and will help them grow and be there when they have the opportunity to become a homeowner or they need to or ready to start a business is critical. And so, but again, that's not going to typically happen in as targeted, as an effective or respectful way if you're looking to a traditional credit union or a bank. CDFIs are our DNA compels us to do that kind of work.
Right. Well, as we head toward the hour, I wanted to give you guys the opportunity to make some final comments. But I'd also like to throw in one additional question, and then I have a question for myself that I hope that you could sort of address in your closing remarks. So what role do CDFIs have in addressing predatory lending institutions like cash advances? What can philanthropy do to address these predatory lenders?
We are trying, in many ways, CDFIs are research and development arm of the financial system. I'm proud of every loan we make, every account that we open, but we're dropping the bucket relative to the need. So we show what is possible, and then try to scale it through policy advocacy and through scaling our own operations and getting banks to do some of and take on some of the products and services that we have shown are effective in addressing these issues. And we also take data from our work to go and advocate for policy changes. And one of the things that we have been most aggressive around is putting checks on payday lending. In my opinion, there should be no entity that exists and their business model is based on abusive financial practices. And that is what you find with payday lenders and check cashers and cash for title and so many of these entities. So we should let people who should understand that they should be severely restricted or outlawed. And the flip side is, in their absence, you need CDFIs to step into the void and fill the gap. And so supporting CDFIs and advocating for policy, those are two, I think, very effective ways to combat predatory lending.
I've got one additional burning question that I'm asked to pose. So, are there data gaps in terms of understanding the experience of your customers and how best to serve them, or having the data that you need to influence sources of capital and power?
Well, more data is always good, but I feel like we have enough data what we need are partners to help us actually access that power and influence, right? I think maybe Bill and I haven't been compelling in the last hour, but I think we have teams behind us who could fill in what more data might be necessary. I feel the same way if the question had been about innovation, right? Like it's like we don't need more ideas either. What we need is to be supported for the ideas that are already at work.
Right.
I think more often than not.
As you think about your final comments, then let me kind of tie this in. One of the things that we've been thinking about within Reese is what are the necessary policy changes that can address the issue of persistent poverty in these communities? Because I think, as you know, many of the investors that are in the ESG SRI space are investors that tend to do a lot of advocacy work. And so to that extent, could you address that particular issue, linking it back to the policy piece?
Well, for me, it boils down to three things. Access. People need access to the tools that other in high mobility, more affluent places take for granted. We need the same things. We need decent, quality, affordable housing. We need access to banking service. We need jobs. We need healthcare and policies. Any policy that's going to broaden access are important. And when you have access, it needs to be, and in particular access to capital, it needs to be affordable, and down payment assistance to make homeownership affordable. That makes a tremendous amount of difference. Policies that limit the ability to charge predatory pricing. I think that's critical. So access, affordability, and then finally policies that promote protection. Because when people get these resources, when we're successful, again, they don't need to be exposed to predators who can, without accountability, step in and extract the gains that they have made. So policies that promote access, affordability, and protection.
Great. Any final comments?
I'll let Bill say whatever he wants.
No, I thank you for letting us share a bit about the work that we obviously care deeply about. Really honored to work with so many amazing people at Hope and with allies across the country, but none more than Jim and our colleagues he mentioned the Partners for Rural Transformation. We've got a network of CDFIs that are in some of the most impoverished places in the country that recognize that we have a lot more in common than we have that divides us. And so we're working together to try to attract investment into places that are most vulnerable. We really appreciate any support that our groups can get from folks who are listening. Really encourage people who are listening. Often we would preaching to the choir. Let's get out and tell other folks about how important this is. I really think that we're at a unique point in history. More people are paying attention to these issues of poverty and racism, and now's the time to act on it. Let's stop talking about it and act on it. And so, again, thank you for the opportunity, and we'd love to. We welcome any support we can get. HopeCU.org if you want to learn more about our work. And again, thank you for all you're doing.
Well, thank you, Bill and Jim, for such an engaging conversation. And I'd like to also thank our participants for joining us today. And we've had a number of individual donors who have helped to make this session possible, and will be supporting other conversations in the future. As a reminder, we have 2 upcoming conversations. One on August 26th, fixed income investing in regenerative agriculture and resilient food systems. And the second, which is on September 22nd, workers' representation on board. So please join us and feel free to email conversations@Croatan Institute if there are any remaining burning questions. Thank you to everyone for joining us today.
Thank you.
Thank you.